President Trump has paused most tariffs, but the trade war isn't over. It's Thursday, 10th of April, and here's what you need to know. So you'll have seen that most of the new US tariffs have been put on ice for 90 days after a surge in US borrowing costs caught President Trump's attention yesterday. Wall Street had its best day since October 2008, but it may not last. Still on the table is a 10% duty on imports from most countries, 25% on steel, aluminium and cars, and a whopping tariff on China that President Trump has now hiked to 125%. Our stock of the day is Amazon, one of the US companies most likely to be affected. About half of its sellers are in China, so they'll either have to more than double their prices for the US market or stop selling to American consumers altogether. Remember, fast fashion giants Shein and Temu also manufacture in China. Its e-commerce exports were worth $358 billion last year, so the tariffs might still mean the era of ultra-cheap clothes and homeware could be over. Our chart of the day is the Chinese yuan against the dollar. It's at its lowest since October 2007 as China's central bank is slowly devaluing it to help counteract the effects of the tariffs. That is not what Washington wants to see happen, and it shows that currencies could be a key front in the trade war. China and the US could use their financial systems to retaliate against one another. Remember, China owns $760 billion in US treasuries, and if they started to sell, US borrowing costs could spike again. Our number of the day is 2.6%. That's the forecast for US inflation year on year in March, which is out later. Of course, that number will only capture a tiny part of the tariff news. Federal Reserve policymakers think tariff uncertainty will lead to both higher inflation and slower growth this year. That's according to the minutes of their last meeting, which were published yesterday. And that's what you need to know this morning.